Assalamu alaikum rahmatullah friends. So this is the series of video in which we shall review the requirements for AAOIFI accounting standard number FAS, financial accounting standard developed by AAOIFI standard number 32, which relates to Ijarah. So the first thing is about the scope and what is the change from in this standard which was developed recently compared to the old standard. So the earlier standard was FAS38, and this standard is intended to actually replace that earlier standard. And the main difference is just align with the difference that was there in the IFRS lease accounting earlier and in the new standard, probably IFRS 15 or 18. I don't exactly recall. So earlier, the main issue with the lease accounting that analysts come up with was that the operating lease, usually the lease which did not actually result in the transfer of ownership of the asset, which was not a mainstream financing transaction. In the operating lease, the lease asset was not recorded in the books of the lessee, in the books of the buyer. So the buyer just recorded lease expense, rent expense, rent expense, rent expense. So even if I have taken a generator set for my office on lease for 5 years. This is, by the way, universities do. They take it from Oryx leasing generator, and they don't take it with the intention of buying it. It's not a car lease that eventually the title transfers. So I pay the rent. There is a 5-year commitment on both sides. I pay the rent, and the only thing which appears in my income statement is the rent expense for the generator. And neither the depreciation nor the asset generator itself appear in my books, right? So although I am the beneficiary of all the benefits, right, although I do not have a complete control, so from the control point of view it's not my asset, but from the benefits point of view it's my asset. So that was the actually in the earlier lease standard as well as FAS, the mainstream objection that the lessee do not record an asset even though the asset is with the lessee for, say, a longer period of time. He is the beneficiary of all the benefits of the assets, but he is not recording the asset. So the new lease standard come up with actually addressing this requirement, and then there come the requirement of recording an asset with the title right of use asset. So even the asset is not asset by definition because I do not have a control on asset, right? I have not control on the variable benefits that I am drawing. I just can benefit but I do not have control. But still, the standards now say that you do not record an asset outright, but you record a right of use asset. So this is the mainstream difference on the lessee side. On the lessor side, there is no difference, right? The core concept, recognition of the lessee's right to benefit of an asset, the right of use asset, rather than just off balance sheet expense recording. Off balance sheet asset recording should be the wording here. Again, this presentation has been developed by, as on the bottom right you can see, Notebook LM, which is a very good software to help us in this context. But of course, I have to give multiple prompts again and again and again to come up with what I am actually requiring. So what's covered in the scope? All Ijarah items, including the Ijarah Muntahiya Bitamlik, which is Ijarah that eventually results in change of ownership. Bitamlik means the milk changes, right? So that's a finance lease, that's the capital lease, means that we have taken an asset on Ijarah, right? And the bank has given us an asset on lease or Ijarah, Sharia compliant lease, which is Ijarah. But after a certain period of time, there is a promise that on the side of one party that the asset will be transferred to our name, right? And diminishing musharaka Ijarah, in which the transfer takes place gradually. So the asset is actually a sort of a combined asset, and gradually the transfer, the ownership percentage of the lessee increases and the ownership percentage of the lessor decreases. So these are also covered under this standard. But expressly what is not covered is if there are sukuks under the Ijarah arrangement, right? There are mass issue of these Ijarah documents, these Ijarah financing documents, then that becomes a sukuk, and that sukuk there is a separate standard to cater for that. Also, FAS32 mentions that natural resources exploration and extraction, these are also not covered in this. And finally, the service ijara, pure service ijara, which is the human service ijara, employment, professional services, right, without tangible asset. If there is no tangible asset, it's just services. So I go somewhere and I provide consulting, so I charge ujrat, right, but that's not covered under this standard. So we have already gone through the definitions. So a few mainstream definitions which we should be is the right of use asset, right, which is a legally enforceable limited right to use an asset, which is also known as usufruct, from an underlying asset, the asset which is the subject matter of ijara, without entailing ownership risk, recognized as an intangible asset. So keep in mind that if I own a machine, that becomes a property, plant and machinery, tangible asset, right? But if I own a right of use machine, then since I do not have the ownership risk and reward, I only have the usage risk and reward. So that's the right of use property, plant and machinery. So this standard specifically mentioned that this has to be taken care under the intangible asset. It means now we will not be recording depreciation, we will be recording amortization. Although this express difference of wording is not there in the IFRS. The second important definition, the ijara muntahiya bitamlik. So a hybrid arrangement combining an ijara contract with an independent unilateral promise. So two contracts cannot be combined, as we studied earlier, and again, one contract cannot be conditional upon another contract. So there has to be a unilateral promise to transfer. So usually the lessor actually promises that, okay, after a period of 5 years I will transfer the asset into your name with such and such conditions. So via sale or gift at the end of the term of, although for all practical purposes this is a bilateral understanding, right, but as per the documents it's a unilateral promise. So this is the ijara muntahiya bitamlik. So there are certain different requirements which are required for this. Then diminishing musharaka ijara, as we just discussed, which is the co-ownership of an asset, a promise to buy proportional shares over time, and a separate ijara contract to rent the unowned portion, right? So again, the two contracts cannot be combined, so and cannot be conditional as well. So there is a one contract in which the lessor says that, okay, I will buy this asset gradually, every month I will pay something and my share in the asset will increase, and every month also I will pay rent on the remaining your portion. So the total amount which the lessee pay every month has a certain component of buying the asset, another certain component of leasing the asset, which is the rent. So that's the diminishing musharaka ijara. And combined asset is usually the asset, underlying asset, in the case of either ijara muntahiya bitamlik, in an ijara bitamlik through gradual transfer, where so again the diminishing musharaka is a type of a MBT, and any asset under MBT, right, is actually a combined asset. So it is the asset under diminishing musharaka ijara. So that's it, and then in the next video we shall see the accounting treatment specifically in the ijara contract. Thank you.